Good morning, everyone. This is Tricia with Easy E-mini Trade, and this morning I just wanted to go over um, when you take the Slinky or Kaboom setup, how you can get in a trade when price has already been moving for a while. Like based on yesterday, the 27th, to the Tuesday the 27th, we opened up to a huge gap down, and price was already so far away from where we closed, and had a strong downtrend right off the bat from like 2 something in the morning, my time, Eastern. So what do? How do you get in a trade? Because when you have a strong trend, you're not going to get a lot of the setups. So let me show you how you can do that. And then also, I'll be doing a webinar on Thursday at 8 p.m. and I'll go over more info on the Slinky and share with you what others have been sharing with me with different instruments and so forth and different types of charts that they're trading off of. And I'll also go over the Kaboom setup, taking that off of larger charts. And so if you want more info on that, just go to my site, easyeMinitrade.com, and choose the webinar tab. So what you're looking at right now is the NQ from Tuesday the 27th. And this applies no matter what instrument that you're trading or what time frame, tick frame, range frame that you're trading from. The larger the chart, the less noise. I'm sure that you've probably already figured that out for yourself. But right here at 2:58 in the morning, yesterday, the 27th, we get a Kaboom setup. So you can see our indicator crosses below zero. And, most of us are sleeping at that time in the morning. They're not trading. But you could see that it just kept on going straight down until basically, we opened at 9:30. Here would be the Slinky setup back here at like 6 o'clock in the evening when it opened again, or thereabouts. So keeps going, going, going. So we come into the picture here around 9:30, and it's already moved all this way. So what do? We actually get a Slinky setup here right around 4,200, but it's before the open. So if you're not going to trade before the open, this wouldn't be one that you would even consider. So we open. It's a little wild and whippy off the open yesterday. And when you find that the environment is like that, really wild and whippy, you are likely going to have to trade off a larger chart. We like a 4-tick range chart, and when price is going that fast, it can be a little difficult to get in the trade. So you just drill up to a larger tick chart or a range chart. So you can see, obviously, we have a strong downtrend here. The dots on top and the dots on the bottom are the super trend stop. And this is our MACD. And I'll go over all the settings and so forth on these indicators during the webinar, so no worries. So the Slinky is pretty easy. We're looking for a close above or below our super trend stop. But when you see that you have such a strong trend like this, when price closes above the dots in the opposite direction, it's hard to want to take that as a buy after it's gone so far. So a couple options that you have: you could stick with the overall trend, and usually what's nice about the super trend stop is that when price closes above them or below them, most of the time it's going to signal a direction change. The larger the chart, the more valid that is. But I slapped on a 50-period EMA here. That's what this yellow line is. So here's a couple ways that you can get in a moving market. So obviously, strong downtrend. Not really too keen on trying to buy this because I'm not convinced that it's going to change direction. So what you could do is you could take a pullback to the dots, the super trend stop here, wait for it to roll over, and then short it again, or you wait for a pullback to the moving average. Now this is a 50. You can use a 90. You can use a 30. There's no magic number, whatever you like to use. So you wait for that to pull back, and then you can just wait for one red bar, since we're looking to take a short, and then look to enter in under that bar right here. Let me just put an arrow here. Look to enter in under this bar right here. Or you could wait for another close below the super trend stop. Either way, it's fine. So you could see this bar hitting the moving average, this one closing below, this one still touching. You can get in under this bar, this one, any of these bars that are hitting that 50-period moving average. Or like I said, you could get in short here. Then you get another retracement back here to the moving average. You could get in short here, etc., etc. Here you can see that we hit the moving average, and you could get in short there again. Now each one of these bars are pretty large in size. They look small because I have to fit a lot on this chart right here that I'm trying to share with you. But if you get in, you know, right here, let's say, trades back up, you want to get in under this bar here. Here's our first red bar. You get in under this bar here. And this is still good for, let's see what the entry would be on that, 79.50, and it still gets down to 71.50. So, you know, there's still a good 8 points that this moves lower here. So, you know, even though it doesn't look like it was really worth the effort here, you know, you could easily have gained, you know, anywhere from 6 to 8 points on that. And then once you see price starting to change direction here and starting to spend more time above that moving average, then, you know, you might not be interested in trying to take a breakdown, a pullback anymore. You would just wait for a breakdown again below the new dots here. So here you could see we trade up to it, but we never get that red bar close below. And like I said, once you're back above that 50-period moving average, or whatever moving average you choose, then you're not going to try it as a pullback. You're going to look for a brand new setup. So here at 10:11 we get another one. So here, and I'm just going to scroll out here. Here we get another slinky here. Here we get a buy again on the top side, right where I've got this marked at 10.25. But, you know, we're still in a pretty strong downtrend, and we're still under that 50-period moving average. So, you know, you might not want to be too interested in this. Or, of course, you could always take the risk and try it. Or just wait and see if it actually wants to change direction and then look for a pullback in the opposite way. So if it takes off higher and you missed it, then you could just take it as a pullback. So here you get another slinky setup here at 10:30. So when it's moving strongly, you're just going to take the pullbacks to the moving average, or you can even use the super trend stop to pull back from. And the same thing with the MACD, with our Kaboom. When you have such a large gap down, we're never going to get those crosses above and below like you need for the entry, so you're going to have to rely on a pullback entry. And that's it. It's that simple, and it just takes a little practice, and with time it will become second nature. And here, let's do one more here. This is coming up into 11 o'clock here. So you could see right here we get a close above the dots, so technically that would be a new slinky setup for a buy. It does go on to work out, but after such a strong downtrend, it would be difficult or hard to want to pull the trigger in the opposite direction for a buy there. It doesn't actually trigger on the next bar, so likely you wouldn't have been able to get in. So you can wait for it to, because we have such a strong downtrend here, you can wait for it to get back above that moving average and then wait for the pullback to the moving average or the dots and then buy it. So then you would buy it above this next bar here. And the Kaboom, this is actually where the Kaboom buy would be, right above this bar here that I've got marked at 11:01. So I hope that helps, and hope to see you tomorrow night for the webinar. If you have any questions, as always, you can send me an email. Have a fabulous day.